Yo, yo, yo. Alright, I think I got some sound here. Yep. Okay. I've got echo. Alright, there we go. Alright, so tonight, just a real quick video. I'm just putting something together. So I spent about 5 or 10 minutes. I was looking for an algorithm that I could put together to make for identifying continuation. So one of the stocks I was trading today was FEMY, F-E-M-Y, and I was just trading it manually. You see some of my entries here, and I guess those are entries as well. And then my exits here. I was looking for something specific. So the stock to make these higher lows here and higher lows, and I thought it was headed for a breakout here. We had a little bit more increased activity here, but again, so I'm not really getting into all the technical stuff right now. I'm really interested in the algorithms and making strategies that I can trade with the algorithm so it'll automatically go. All right, so one of the things that I looked at tonight, and I'll show you the script here in a second. Here, let me get the script on. And then I'll explain to you what's on the script. All right, so if you can see this. So what I've got here is that value 2 is less than 0. So value 2 is the linear regression of the middle of the bar, so the mid bar, over, I guess this is over 5 bars. Over 5 bars, you want to find the linear regression, and you want to take that value 2 bars ago. So you don't want to take so it'd be like the y-intercept. You don't want to take that on the bar that you're looking at. You want to take that on the bar 2 bars ago. So for instance, like these bars here, bar 1, 2, 3, 4, 5, it would try to find the average. So the middle of this bar, 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 and then it would just, so the line that would plot it would be something like that. Okay, so then I'm not taking that value, I'm taking the value 2 bars ago. So I'm taking this value. So I'm taking that, and then I am, let's see, and then from that I'm subtracting the middle of the current bar. Okay, so what I'm trying to accomplish here is I want to see that these bars are moving in somewhat of a linear fashion, whatever fashion they're moving in. The linear regression is going to find the linear fit. So, but in order to find a dip or something that comes down, you want to find that the low of this bar or the middle of this bar or some lower value of this dip bar is lower than this value here. So I said this value here minus the middle of any target bar is what we're looking for, but we want to identify what that is. And so once I put that together as a indicator, it gave me this line down here. Okay, so if you look at this line down here, typically this red bar crosses under this 0 line. When it crosses under, see when it crosses under here? If you go up, that's a dip. When it crosses under here, when you go up, that's a dip. When it crosses under here, and here it's a little bit more shallow, yeah, but here it's a nice little peak, little valley. When it crosses under, it's a dip. Here, under, it's a dip. Okay, so you get the idea. All right, so what I said is I want to take that same formula then. I want to take this same formula, which I had as an indicator on this, for this script. It's just the indicator. I took that script, copied it, and then I put it over here. And so I said this value has got to be less than 0, because we identified over here when it's less than 0, it's an indicator of a dip, right? So also, I said that I want the bottom wick to be greater than the body times 2. Okay, so we know that the wicks are comprised of the top of the candle and the bottom of the candle, wherever So if your high is not equal, if it's a bullish candle and your high is not equal to your close, then that top part is your wick. If it's a bearish candle and your high is not equal to the open, then that top piece is your wick, right? So on the bottom side, it's kind of the reverse. So if you're low on a bearish candle, if your low is not equal to the close, then that bottom part is your wick. So we want to say that that value there, that bottom wick, is going to be greater than 2 times the length of the body. The body is just the difference between the open and the close, right? So the body is the solid part of the candle, or the hollow part of the candle. All right, so we want to say that the bottom wick, if we can zoom in here without messing everything up, we're saying that this bottom wick here is at least twice as big as the body. And so here it's true, here it's true. But not only is that one criteria true, right? So we got the one criteria for the bottom wick being 2 times the length of the body, but also this value 2 is less than 0, right? So on this candle, the bottom wick is greater than 2 times the length of the body, and value 2 is less than 0. And then it looks like I put it one more criteria here, that the linear regression of the slope of the non-period moving average is less than 0. So all this is saying is that this is just saying that the slope of the non-moving average is less than 0, less than or equal to 0. So pretty much just saying that the non-period moving average, and again, I'm looking for like a continuation on the non-period moving average, particularly on this 1 minute time frame. But so I'm looking for the non-period moving average to at least come over and rest a bit, or come down slightly, right? And then go back up. So I don't want the non-period moving average to be too steep, moving up too sharply. If it is, then it could certainly be a scalp, but it's not really like a continuation trade. So like I said, going back here, just want the non-period moving average to be flat or downward sloping. And like I said, FIMI is a, it's a chart of its own, but I know for other charts I'm probably going to have to end up making some more criteria to make it fit better, such as that the non-period moving average has got to be over the 200 period moving average or something like that. This red line is the 200 period moving average, this black line is the non-period moving average, and that just helps establish that we have more bullish momentum. All right, so one other thing I've done since I've been online with you guys is this up here. I like this up here. So I put this together, and so it just tells me on each specific chart, it tells me what's going on at a visual glance, right? So instead of having to look down here at the indicators, or instead of waiting for an indicator to pop up, I can see how close this may be getting to happening, kind of real time versus seeing it just pop up. So I've got it on all my charts. All right, so if you see here, put it on all my charts. So on the 2 minute time frame, the relationship from the non-period moving average to the 200 period moving average, the 9 would be under the 200. The relationship of the middle of the specific bar to the non-period moving average, the middle of the bar is under the non-period moving average. Same thing on all these. And then this SA of the 9, this is the slope of the non-period moving average. So again, like I said, we're talking about how steep the non-period moving average is. If it's really moving steep, then if you're on a larger time frame and you got a steep non-period moving average, or you have a steeper moving average, then that's a good sign. That's a good sign that it's going to continue to move in that direction, at least for the short term. But that's not as useful on that. Well, it is as useful. It's not as useful in that same regards on a shorter term time frame, because on a shorter term time frame, If you're already moving up, then it's probably time to move down, right? So you want to get in when it's resting, and then you want to get out when it's up. On the larger time frame, yeah, you do want to be in as it's moving up. So and that's why, like I say, I've got the 5-minute time frame here, or for this one, sometimes I might put it on the 15-minute time frame or on the daily, something like that. But like I say, it changes with each one. And like I said, the 9-period moving average is under the 200-period moving average as far as the daily goes, right? But as far as the middle of the bar goes, the middle of this bar is over the 9-period moving average. So it looks bullish in that respect. It's definitely, I don't want to say it's bearish in the long-term respect, but it is, right? So if you look back, right, you see that it's bearish. Okay. All right, hang tight. Hang tight. All right, I'm back. All right, so yeah, so that's pretty much how this works. And then up here, I've probably showed these to you guys before, the bid and the ask size. So the red one is the ask size. When you've got a lot of ask coming in, the values up here get higher. The blues are the bids. So just kind of recording all this data for now, so I can go back and see what happens where, and if it's an indication of movement. So yeah. All right. What else? Anything else new to show you? Yeah, no. So that I think I put that together pretty quick. So a couple minutes I put that together. But let's see how well it's doing. I mean, it's pulled out some of these dips pretty well. I mean, you could at least, well, I wouldn't like the risk to reward on this one. You know, risk to reward on that one wouldn't be great. This one is okay. It's okay. I mean, a lot of these are okay as long as you operate with a stop loss. You would have made money on that one. You could have made something on that one. Made something on that one. Yeah. I mean, this one you might have got stopped out. I mean, but this would have been, it would have closed here, so you would have said your stop was here. I presume. But you would, so then you would have got stopped out here before it moved up. So unless you, yeah, because I could easily see saying that this level here would be your stop. Yeah, something like that. Yeah, so that would have been pretty tight. That might have been stopped out. And again, guys, you cannot win them all. You know, all of your trades will not be winners. That's one of the things that I'm still learning. Is that all of your trades cannot be winners, and that, my friends, that is where us folks who like to win, who like to be right, who like to always find a solution, always find an answer. Trading might be a great avenue for us, but that's also where we'll suffer, is because we can't let go of losers, because we've got to make it. We got to make it right, and you can't. All of them will not be winners, right? So here we would have got in here, could have took some profit. Boom, boom. Yeah, so I mean I like this, and so I will probably play with this tomorrow and see if it's profitable or not. And if it feels good, then I'll make it into an algorithm, or I'll make it into a strategy. But let's see, what else was on the, let's see, what else was on here? SLNO, I think that's something that was being traded today. I need to apply that strategy to SLNO, see if it would have found anything. Show me continuation algo, bam, boom. I mean I like it. I like it. So it would have got that dip going up into a halt, beautiful. It would have got that one going up into a halt plus some, beautiful. Would have got that low, beautiful. Got that. I mean, that one you would have got stopped out, but okay, that's fine. I mean, you're really getting, I don't know, you're really getting this pretty close to support here anyway, though. So you don't have much room for any wiggle, right? So this area in here, you're looking at a possible support there, unless you looked at this one and you drop that support down a little bit lower, something like that. Which you still would have got stopped out, right? Still went through there, but that's okay, because again, right, not everything is a winner. All right, so here, boom, could have took that for a short one. There, you probably would have got stopped out down here. Here, that was a good one. I mean, yeah, I like it. Even if you consider these like reversals or something like, or you're just looking for like really 1 bar scalps, you could make money with this. You could make money with this. Look at that. Got that in that dip. Got that in that dip. Yeah. All right. I like it. So I'm gonna put something together. I'm gonna play with this tomorrow. Make a few trades on it, and I'm only making small trades, guys. I'm only making like one share trades, 5 share trades, something like that. But as these things continue to look better and better, I will put them into action. Okay. If you had any questions, I tell you what, I'll hang on for about another 2 or 3 minutes. If you have any questions, just go ahead and put them down in the chat. If not, then I will see you guys next time. So while I'm waiting to see if you have any questions or anything, I'll go ahead and just kind of do what I do. All right. I don't use the Bollinger Bands often or ever, but I did say that I wanted to create an algorithm that works with the Bollinger Bands. And I don't even know if I can do that. Let's see, edit easy language for Bollinger Bands, because I have to capture the 2 standard deviation and the -2 standard deviation lines. In order to make a strategy around it. Upper band, that would be the upper band. So just for kicks and giggles, because I always said I wanted to do something with this, and so now I have the opportunity just to go ahead and do something with it. Control A, copy. This needs to be a show me. Let's see, the name of it is going to be Bollinger Touch. Let's see what it does. So up here is all my stuff. I'm gonna put the Bollinger Band at the top of it, and then we're gonna say to Tell you what, we can take this one off because I'm on a plot for that too. So take that one off, go back to this one, and then it will be upper plot, upper band and lower band. Okay, upper band and lower band. All right, so I'm just gonna say, let's take this one off for the time being. Attenuation, I'll go take that off, and then we're gonna go back here and we're gonna say, if, let's see, lower band, because you don't want to get in at the top, you want to get at the bottom. Lower band, let's see, low is less than lower band. Plot's been defined a different name, value 1, value 1, okay, so let's make this like value 17, because value 1 has probably been defined and used in the script from the Bollinger Band. So we're gonna make this 17, and then we'll just get these out of here because we don't know if those have been used. 17? Plot has been defined using a different name. Plot 1. Oh no, it's the plot 1. It's the plot 1. So we're gonna make this plot 17. There we go. Because there's already a plot 1 up further in the chart. So now verified that. Go back here, and I forgot what I even called it. Bollinger, exclamation mark, Bollinger. What did I call it? Exclamation mark, Bollinger Touch. There it is. Okay. Oh, whoa, duck. Alright, so then clean this up a little bit. Double tap on that. So this upper band, instead of a point, it needs to be a line. This lower band needs to be a line. Midline, we don't even need it. So how do we get rid of that? Yeah, well, let's make it a line also. Plot 17 is that's going to be a point. Matter of fact, let's make it a cross. Plot 51 should not even be plotting. So now let's hit OK. All right, so we have the top line, the bottom line, and then here are the crosses where we get the touch, right? So the touch on that Bollinger Band. All right, so we said that the low has to all right, computer. Going a little slow on me. What you doing? There we go. Oh, okay. All right. Got some lag or something. All right. So here, when the low touched the lower band, now we got a potential entry, right? So would that one have worked? Sure. That one was a great entry, right? All right. But with this one, okay. Now you're not dragging or anything. Okay, there we go. Would this one have worked? No, it would not. Now we're at this one. None of these would have worked. I don't like that. I mean, I like this one. That one's okay. But other than that, tell you what, my chart does not like, unless my computer's getting ready to do something else to start another process, it does not like this Bollinger Band script because it's moving very slow. All right, but these would have worked. That one would have worked. Yeah, so I've got to figure out how to utilize this, but I do see some significance here. I see how it could be used because, I mean, that one could have worked. That one could have worked. I mean, there's plenty of times when a touch led to some reversing action, except for these. So I'm thinking, okay, the Bollinger Band it came from an area of contraction. The volume, let's see, volume, no, okay, so volume here is a little bit higher. So maybe we need to have higher volume when the Bollinger touches. Now see, this is where the logic piece comes in, where you gotta make it make sense. Make it make sense. All right, so here, yeah, the volume is also a little bit larger. Here, the volume is it's at least as large as this yellow line here. That yellow line is the 6-period moving average of the volume. Here, these also are close to the 6-period moving average, so that wouldn't necessarily work. Everything is downtrending here, though, and also that 9-period, that black line, the 9-period moving average is trending down. So there's something here. There's something here with this Bollinger Band. I mean, even I'm thinking of something with this contraction. I'm thinking that's going to be part of it. Is that it can't come from an area of tight contraction. It's got to be an area of some expansion, like this. You see how far this is? This from this middle line to this line. Let's see. I bet I can make something. This says that distance has got to be. So this distance from here to here is 11%. So I might say something like, go back to here and then say that the, let's see, is there a midline? Let's see, I know we have the lower band, upper band, so the average. Average, let's plot 3. So let's say that the average minus the lower band, average minus the lower band over, I guess it's the average, over the average. Gotta put your parentheses where they're supposed to be, otherwise your order of operations is off. All right, so so your average minus your lower band over your average has got to be greater than, let's say 11%, so 0.11. We verify that. Okay, so we got rid of these, right? Let's mute that out. Can't mute it out right there. All right, so condition 3, mute it out here. Yeah, so we had these here, right? So we had these and we didn't like them. Okay, and now when we went back and we put this condition here in, so that average minus the lower band, so that distance has got to be greater than 11%, then we re-verify, and now we get rid of those there that we didn't want. All right, so I just need to make sure, well, I'll just delete that. Okay, so now when we go back over, let's see what it looks like now. We got rid of a lot of stuff with that one. I think that was too exclusive. All right, so we definitely got some areas of expansion, but that expansion was way too much. So, and this is where like optimization comes in, where you can go in and you can kind of fine tune to see just how much you need that expansion to be before you end up losing all of your valid entries. All right, so there we got that, but that's after hours. We got that one. You see any more crosses in here? There's a cross. Yep, that's after hours also. All right, so overall, nothing likes that expansion to be, greater than, I don't know, let's try 5% now. And like I said, here's trial and error, but when you go to the optimization report, the strategy optimization, it'll calculate it using its computer brain. All right, there we go. All right, that's after hours, but I still like it. This is the area that we got. We said we didn't want these. We got those back because now we're in that expansion area where it's only 5% or more. So, you know, like I said, there'll be some other criteria that you can use. So for instance, maybe let's say, all right, so this bar is super long, right? So we'll say that the average bar has got to be like less. You see these bars here are kind of short, so they're shorter than the average of these. So we'll say that the bar has to be shorter than the average. Then we have, we'll lose this one, but these bars here are pretty short too, so we'll still end up keeping those. So watch. All right, so we'll say that the range is less than the range 7, which range 7 is the average of 7 bars. You see, we lost that one, we lost that one. Still have these, we still have these. And if you were to take the entry and you took it here, and technically, if you entered on this bar here, I mean, there is some meat there, right? You take it from here back up to the average. You take this entry here back up to the average. Where else do we have our pluses at? We might have got rid of some more pluses when we put in that next piece of criteria. All right, so you would have got it in here, try to take it to the average, didn't make it. Again, though, these bars are a little bit darker, so this is after hours. So how much credence do you put out here? Same thing here. You would have took it here, maybe shooting for the average, and it didn't go. So those would have been stopped out 2 times, but that is after hours, so that does not mean as much to me because I don't love after hours. All right. Yeah. So with that, changing that criteria, if we were to do a Bollinger Band play where we get in when the price hits the Bollinger Band, yep, and the range is a little bit. Let's take the range out. The range criteria. Okay. So we would have got that one. We would have got that one. We would have got that one. I mean, it's looking pretty good now. We would have got that one. We would have got that one. Now these, like I said, in this contracted area, we would have got stopped out here. And so, like I said, I think the next thing is to figure out the logic such that once you get stopped out here, you don't continue getting more entry signals until, a certain number of candles later. Or until a new, until a new higher high is, or a new swing high is met. Something of that nature. Ooh, I could do that, but that would be, that would be a little bit more complicated. Let's see. Could I do that right now? Because it would have to say something like, if the swing, so if those criteria were met, no, because I need for the criteria to read that it failed. And that would be a little bit more. That'd be a lot more involved. I love a challenge, but I mean, shoot, man, I'd spend hours sitting here working on that thing. I know I can't keep you entertained for an hour. But okay, so we talked about today we talked about the, we made a script with Bollinger Bands. I like how it looks back testing it. I'd have to play with it a little bit more, you know, add some other criteria into it to see if it could prove to be more profitable. I just had another idea. You know, we're talking about that this intercept down here. If we put that intercept into play with that, get rid of some of these other ones. Nope, those are low. Those are low. We just had one area that was tough. This area here that was tough, and this value here is below 0 also, so that would not help us there. And that is around 12 o'clock. But I mean, we have this huge wick up top, so you know, I don't know who's getting in. Anyway, so yeah, so today we talk about the new little grid that I have up at the top. Just give me a quick overview of what's going on the chart. I'll put those on all the charts at different time intervals, so I can, like I said, at a quick glance. So some charts, I don't know any chart that I can get into right now, but some charts you'll look at it at a certain time during the day, you know, for the daily or for the 5 minute, the 1 minute, the 15 second, the tick. All of them are blue. Just everything is blue, and you're like, man, like, gotta get into it, right? So it's a good indication that everything is strong, without having to guess, without having to look and analyze and but of course you still do want to get in there, back it up, you know, do a large overview and see where your levels are and that kind of thing. So we talked about the grid, we talked about the low intercept there, and then we went over the new script that I made just really quickly. Here it is, the continuation algo, which is plotting these dips here. Boom, 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 boom. And then also just kind of keep in mind that everything is not going to be 100%. You cannot be 100%. Well, maybe. The fact that I would say that you cannot be 100% is not a 100% statement, because that also is not 100%, right? So maybe somebody can be 100%, but I'm not, right? All right. Talk about that, and yeah, I think that's about it. So, like I said, if you have any questions or comments, oh, NASCAR, what's up, man? Yeah. I finally got on here again. Yeah. But I tell you, NASCAR, I have been spoiled, man. One of the reasons why I haven't done as much on the stream is because I've been trading with the Hot Trades group. So I don't know if you know about the Hot Trades group. It's with I think I don't know what his last name is, but the guy's name is Blaze. So I signed up for a subscription there. You know, I'm not promoting him or anything like that. I'm not saying that he's he's not a financial advisor. I'm not a financial advisor. All that good stuff. But it's a good group. It's a good community of folks day trading. A lot of folks doing penny stocks on there. I mean, and like I said before, I don't really do a lot with penny stocks, but if you see what I'm looking at now, it's a penny stock, right? So RNAS, that one was not a great one. It went up, you know, the prior day, and you know, did some gap ups. It was nice, but then, you know, I guess last night they did an offering, and so I guess this was just the company trying to capture equity, and so they did an offering, and then it just shot down. So yeah, I mean, penny stocks, you got to know how to get in, how to get out, you know, what to look for, don't swing it, all that kind of stuff. But I've been having fun just kind of getting in the Discord and trading with those guys, and so I haven't been doing as much with my algos and everything, but I haven't forgot about it, and I'm, you know, getting back into it. But like I said, when I do get back into it and start looking back at it, I see it's like, oh yeah, well, you know, these are good entries, and I could be triggered on those even as I'm doing like manual technical analysis, day trading. I could be triggered on those other potential entries without even without missing a beat if I have it on the chart. So that's why, like I say, I'm already on the chart during the day, so I might as well go ahead and start creating more algorithms that will trigger me for entries or longs while I'm sitting here. So Yeah, man. Good to hear from you. SLNO, FIMI, drop offering soon. You know, I didn't see a lot of buzz in the Discord about them dropping offerings. Let's see, FIMI. What were they saying about FIMI? They were saying something about FIMI, but I think we were just all kind of looking at the levels and looking at that $1 level. Let's see, I got to pull it up here, and I did okay on FIMI. And I was, I think I got in maybe here, and then when the market was about to go up, it broke during the first of the day. It gapped up, and I said, once it gaps up, once it does its thing, I'm out. But it didn't gap up. It didn't gap and go. It kind of came back, and so at that point, I was still in position, right? And so then I kind of managed my position, and then I did end up getting out with profit, but it didn't move like I wanted it to, and then I ended up leaving so much profit on the table. So it was an interesting time, but man, we were on that thing from last night. We were trading that thing last night and this morning into market open all throughout the day. So a lot of people did pretty decent on that. So like I said, being in the Discord and having those scanners and stuff hitting right away, it's kind of been a game changer for me. So maybe I could just like I said, put a bug in your ear. It sounds like that's the kind of stuff that you like to do as well, though. So FIMI, SLNO. I wasn't paying as much attention to SLNO today because I was so focused on FIMI. So, but yeah, the folks in the Discord were trading SLNO today as well. Like I say, SLNO here. If I had this algorithm that I just created, I might have caught this dip, that little dip, scalp, right? So might have got stopped out on that, but back in it. So I'm going to be ready tomorrow, my friend. I will be ready tomorrow. All right, what you got? I like the PR and set up my SNL. 300 share bid at 462. Okay. PR at 730 canceled a minute. Ah, man. Okay. Yeah. I know somebody in the Discord, I think they had it at $5. They had it at $5 and they got out. Where's this? Market open. I think they got out maybe up in here. They were holding from $5. So you're you've got your ear to the buzz. You kind of know what's going on. You know what's going on. Gonna do it. Ran all the way to $30. Painful. Yeah, man. Yeah. But again, the fact that you kind of got in and I mean could identify it. I think that's the joy and the beauty of it is. Because you can reproduce that, right? You can reproduce that. It's what I used to do, right? It's like get into a stock and you try to wait and hold it and think that it's going to solve all your problems in life. It's going to be that magic bullet that that makes you a millionaire, multi-millionaire. That one stock doesn't happen like that. So the fact that you can rinse and repeat, that's those base hits, man. That's where it's at, and it sounds like you got it. So SNO, FIMI, yeah. I don't know what else. Did you trade anything else today? Let's see. I'm not sure if Benzinga had anything else. Like, did they have anything on pre-market that was a noise maker? Like I said, because I didn't look at a lot today. I just looked at that. Where are you at? Let's see, SNO, FEMI, ICPT. I didn't hear about that one. IMVT, kind of heard or saw that one going around. Yeah, maybe just the IMVT. And ADBT maybe? Well, AVTX. So people were trading AVTX. And I think I had maybe one share of that. Let's see. Did I even? Let's see. I'm just going to replace that with RNAS. AVTX. GLTO. Very quickly after the hours got in at 65 and 70 cents. Nice. 65 to 70 up to 90. That's what? 25 cents on 65 cents, almost 50%, 40%, something. That's pretty good, man. AVTX, yeah. So and like I said, AVTX isn't one that I was looking at. This is after hours. Okay, so I guess it made a nice little run up after hours. Okay, so that was one that we were looking at. I think this morning, but I didn't much look at it during the day. Like I said, I was focused. I was focused on FEMI, but AVTX looked like it kind of flopped a little bit, didn't it? Maybe potential to get in there. Let's see. Just out of curiosity for me, if I add that indicator to this, I'm curious of what it'll show. What was it? The continuation. Continuation algo. Oh man, it's just light this thing up like a Christmas tree, which I highly, I mean, yeah, decent, right? That one's decent, right? This one you might have got stopped out, or you could have took it for a short run, knowing that your risk reward has got to be a little bit tighter since it's coming in so hot. Here, nice. I mean, it kind of found support there, found the support line. And even if you had got in there and had just support a little bit lower, you wouldn't have necessarily got stopped out because it moved up from there. So I don't know, man. Maybe some potential to this after all, 1/3 for a big move that didn't come, ended up selling at 78 cents. Yeah. That happens too, though. That's on FEMI. I was holding it, man. I was holding it. I was looking for like $300 or $600 on it or something like that, and end up. I think I ended up getting out for like a 150, and I was going to get out half and then just wait and hold for again a bigger move or the rest of the play, and just move my stop loss up to break even or just above that. And man, it was so up and down. And the first of the morning, the volatility was so crazy that I was ready for my heart to stop beating. And like I said, some green is better than a lot of red. And like I said, you can repeat some green, but a lot of red, you're going to be done for. You won't have any playing cards if you keep going a lot of red. So favorite time of the day to trade, man, I usually do not trade after hours. I mean, it's the wild, wild west. I've always said that. But like I said, after hopping in the Discord and kind of seeing some of the things that are really being traded, the stuff that's truly being traded because it's got a lot of momentum, or because it has unusual volume that's truly significant, those things seem to move with some. I don't use the word pattern, but they seem to move with style. I'll say with style, because there's other things that trade in the pre-market. I mean, it's just as volatile as as you know, an illiquid stock. But these other charts that you might get into that have a good bit of volume, I mean, they trade with a certain style where you can predict the, or you see the, you can see the base setting up. You see that there's being support formed. You know, I mean, it's there's no huge all of a sudden bullish candles. I mean, the candles actually create, right? So they have a certain style, and so if I can you know, if I stay with the group, or if I can identify these charts on my own, and I can continue to trade those kind of charts with that kind of style, that I can see the style, I can feel the style, you know, support and resistance levels that have been created in the past do have some significance, then I mean, I may be able to do after hours. And again, in after hours, you don't have the restrictions, the limitations of the price movement, right? So you're not having the halts come like you do during market hours. So, but typically, I'm looking at like anywhere from 9:45, 10ish to about 11:30. That's about my time. When are you trading? Are you? Because I imagine you're doing some after hours, some pre-market trading. It looks like you kind of have definitely spent some time in the after hours sessions. And again, I mean, I don't even think that the after hours sessions are necessarily after hours market, pre-market, post-market. I don't think those are as significant as truly knowing the levels, understanding the technicals, or having appreciation for the fundamentals. One of the things that I kind of always used to look at was like I would look for this dip here. You know, I just look for any dip, any pullback right here, any drop. I look for any drop, and I get in at any drop. I wasn't looking at the larger time frame and trying to find where there was another horizontal level or something, right? So from here, this peak, these peaks, come over here, you have this this significant rejection. I wasn't seeing that. I wasn't seeing that before. So now when I'm trading, I'm looking for those levels now. So I don't want to get in up here or in the middle here. I want to wait to actually hit that level, and then I want to wait for so even if you was to take this level here and drag it over, I wouldn't even necessarily want to get in there. And look, when it got to that level, it really didn't do anything. I wouldn't want to get in there until it actually did something like this, a rejection. It actually had some significant price action. So I've learned a lot here in the last couple months. Okay, profitable times, and that's good that you kind of broke that down to your profitable times. You know, 8 to 10:30. Is that when you like to trade? Because there's a difference between what you like to do and what works for you. Because I like to trade in my sleep. Nah, not really. I don't. I like to get up. I like to move. I like to be engaged. But I like to trade while I'm driving. But that's not a good idea. I don't condone it. But that's it's not a good time to trade. Trading on my mobile phone. I was actually able to do that a little bit the other day, and this is kind of the first time where I've been able to do that, and it's because I identified levels. I put in alerts, and then when the alert got hit, I came back to it, and then my wife and I were on vacation. I came back to it, and then I looked at it, analyzed it, saw certain price action happening, and then I go ahead and put in an entry. But typically, when I trade before, couldn't trade on my mobile phone because I was, trying to scalp too much. I was trying to in and out, just getting in. Just as soon as I open my phone, I'm putting in a trade. I promise you, that's how I used to trade. As soon as I get in on my phone, and I see a bullish candle, I say, "Oh, we've got some bullish momentum. Things are moving up. Doesn't matter what's happening on the left side of the screen, because I wouldn't look that far. I just see a bullish candle. I get in, and then I'm like, wait a minute. Yeah, it's all bearish, and then it go down. Never fails. And now one of the other things that I've kind of learned through technical analysis and that kind of thing is to I don't, and I'm still fine tuning my my craft, my strategy, but I typically don't get in on bullish candles. I know some people trade breakouts, but that was the epitome. That was how I lost the most money, is seeing a bullish candle and I'd enter. So now I'm always looking for that pullback. I'm looking for that pullback to that level with some price action, and then I'll get in, right? So yeah, it's a spectacular world, man. It really is. How long have you been trading for, by the way? Oh yeah, so Arnaz really got small cash money again prior to the big small cash money. Okay, yeah, small caps, PR. I tell you what, one of the guys on the Discord, he was actually saying though that that Arnaz, that's what they do. He said that they've kind of got a history of running the stock up and then coming back and then putting in an offering, right? Putting in an offering. So I don't know where along the way they've been doing that at, but he said that that they'll do that. They'll I guess run the market up. I don't know if it's pre-market or what, and then they'll come back and they'll put in an offering, and then so it's and that's the other piece about it. Like you say, like what is your niche? What is your niche? Is it following the news? Is it getting into small cap, micro cap, penny stocks early? Is it getting on them, sitting and waiting? Is it waiting for the momentum and riding the whale's tail? What is your niche? And that's what I'm trying to find. Like I say, I really I love the algorithm part, but there's so much even with algorithms, whether or not, just everything, right? So are you looking for stocks that are just kind of holding an EMA, or are you looking for stocks on with a reversal, a continuation? So I'm doing as much as I can with algorithms right now, just so that I can be well versed, and then once I find something that kind of fits my my personality, then I'll dig deeper into that. But I haven't really found it yet. I had been creating something. Let's see. Let's go to Femi. I created something that was on the 1 minute, on like the 15-second time frame, but it combined the 15-second and the 5-minute time frame, and it was doing pretty good. But you have to go in and you have to optimize the strategy for every specific chart. But then once you do that, it seemed to work pretty well. So let me see if I think it was. Axla 914, I think it was this one. That's back when Axla was moving. And if I put it on without even modifying anything, yeah, so it's not hardly giving me any entries. It gave me one down here. Gave me one right here. And these might be, yeah, I think those are mine. See, I don't know if it gave me any. So we're gonna optimize it and see if it works on this chart. Oh, but I think also I don't have a 5-minute time frame in the back of this one, so I might have to add that. And the stop loss and target profit have to be honed down a little bit. All right. Started trading around 99. Man, you got years in the game. Okay. Let's see. Yeah, I appreciate it. Yeah. Yeah, I've got to figure out when to turn those algos on, or if I can get them tuned well enough that I can just kind of leave them on. But yeah, that's what I'm working on. I'm creating enough that something, and I'm telling you, man, one thing that I've learned is, you keep messing with something long enough. If you don't know how to use a drill or use a impact hammer, if you keep playing with it, I mean, you might bust your knuckles a few times, but if you keep playing with it, you're going to eventually figure out some little quirks that's going to make it easier to use, or you're going to figure out how to angle it best. But just keep at it. So that's what I'm doing. That's what I'm doing. Yeah, man. Well, drop me a line, man. Actually, let me see. I'm gonna put my. I don't know if you can grab it from the channel or not, but I'm gonna send you my email address. Just shoot me an email. I'm not hard to get a hold of. All right, so it's just successfromstress@gmail.com. Yeah, so shoot me an email, and I'll check it tonight, or get back to you in the morning, and yeah, we'll see what you're playing. We'll see what I'm playing, and see how we can. Yeah, man, the more the merrier. Like I said, the more heads put together. And I used to be, matter of fact, I just had a birthday on the 22nd. 40 years young now, right? So I used to be. I love to. I don't want to say reinvent the wheel, but I love to figure things out myself, and I got a sense of satisfaction from that. Somewhere along the way, maybe 10 or 15 years ago, I realized that was it wasn't a complete waste of time, but it was not a great use way to leverage my time, and our time is not infinite; it is finite. So yeah, I decided to stop and reinventing the wheel and take some advice from others, learn some things from some books, all those kind of things. Join some masterminds, and that's how I got on with that Discord as well, right? It's like I said, not reinventing the wheel. I mean, yeah, we could all spend as much time as we wanted to doing what, but I'm trying to enjoy the fruits. So if I gotta tap my head together with somebody else and we just blow the thing out of the water, then that's what I plan to do. So yeah, man, hit me up. But let me get off of here before I get in trouble with my wife. And yeah, I think that this is yeah, we'll see what you got. Yeah, cause I could change. Let me see. Yeah, okay, it is back there. All right, so I need to change this to the 15-second anyway, because that strategy was put together for the 15-second time frame. But yeah, we'll put our heads together and we'll see if we can't come up with some good stuff here. 5 minute, 5 days back. All right, so the 15-second and 5 minute time frame, those are the two time frames that one strategy was supposed to use. There we go. So once I change that, now the algorithm, it put in some entries here. Okay, so it would have bought here, and it would have stopped out. No, it would have took profit up here, would have bought here, and then this is, why does that say, why does that look like it did 2 entries? Oh, that's because it was a huge flush. Oh yeah. Well, I mean, what can you do about that? But again, would have bought here, would have got out in the day here. So just curious, without doing any other modification to the strategy, what the strategy optimization report would have looked like. Okay, would have made 3 trades. The first one was good, the second one was no bueno, but that was that flush, and then the third one was good. So yeah, I mean, I'm happy to see that, just without, like I said, without going back and adding or modifying that script. And again, that script was what, 9, I made that script 9/14, I think it was. Yeah, made that script on September 14th, and that thing is going strong. But it's based on two time frames. So it's one to see that the 5-minute time frame is moving up, and it's also one to see that the 1 minute, the 15-second time frame looks good. And let's see, that strategy is here, and that one was a lot more complex, but hey, it did the job, right? So, all right, let's see, small caps, figured that out. The start of September, yeah, big money. Yeah, running on no news. Yep, that's right. Well, I guess the question is, how long can they continue to run for? And then when they're done, then what, right? Because I've enjoyed the last week or two being able to, take a small account and make some pretty decent change off of it. But like you say, as those tend to fizzle, then what are you up against? Are you into those more mid-cap type stocks? And if so, then I won't be as profitable there unless I rearrange some things, which is fine, but or it just gives me more of an opportunity to sit back and spend more time with the technicals and with algos. So yeah, man. But yeah, shoot me an email and I'll get back to you tonight. And I'll probably put out some more. Like I said, I got to get back into putting out some more videos and stuff. So I'll catch you on here anyway. But yeah, let's all make some money. All right, I'm out. Peace.